Artificial intelligence is creating one of the biggest shifts in the global economy right now. But here's something strange. While billions of dollars are flowing into AI data centers, defense systems, and machine learning infrastructure, some of the companies quietly supporting this entire ecosystem are still trading at just a few dollars, or even pennies. Now this is where things get interesting, because the biggest gains in technology cycles don't always come from the companies everyone is watching. They often come from the layers underneath, the parts of the system most people completely ignore. And this is the part most people miss. Right now, there are companies building pieces of AI infrastructure that the market hasn't fully connected yet. So the real question becomes, are these just small companies with big promises, or are they early-stage players sitting inside a much larger AI expansion that hasn't been priced in yet? Today we're looking at two of them. One is trading around 544. The other sits close to $0.063. So the real question becomes, are these simply small companies trying to attach themselves to the AI narrative? Or are they operating inside technology layers that the broader market hasn't fully priced in yet? Now this is where things get interesting. Whenever a new technology wave begins, attention usually moves in predictable stages. First, investors focus on the obvious leaders, the companies building large AI platforms and software ecosystems. But underneath those giants exists an entire infrastructure layer. This includes data storage systems, high-performance computing hardware, and specialized semiconductor technologies that allow artificial intelligence systems to function at scale. And this is where pricing inefficiencies usually exist, because institutions and professional investors often analyze these supporting technologies long before retail investors notice them. This is the type of layer institutions quietly watch. Now that doesn't guarantee anything. Smaller companies always carry additional risks, but it helps explain why certain technologies attract attention before their stock prices fully reflect their potential. And this is exactly where smaller cap opportunities tend to form. The first company operates inside a very important part of the AI ecosystem that rarely gets discussed. Artificial intelligence systems generate enormous volumes of data. Training large machine learning models requires storing and managing massive datasets. But here's the catch. Without reliable infrastructure to protect and manage that information, even the most powerful AI models become far less useful. That's where data protection and cloud-based storage infrastructure come into play. And this is the part most people miss. AI isn't just about algorithms. It's also about the systems that securely store and manage the enormous amount of information these algorithms rely on. Later in the video, we'll also look at a second company that approaches AI from a completely different angle, one focused more on high-performance semiconductor memory technology. As artificial intelligence adoption accelerates, companies are generating larger datasets than ever before. From healthcare analytics to financial modeling to autonomous systems, data volumes continue expanding. If AI systems continue scaling globally, then companies providing secure data storage, cloud infrastructure, and data protection services become increasingly important. Because every AI model ultimately depends on reliable data access and management systems. But again, this is a conditional scenario. Infrastructure providers often grow gradually as technology adoption expands. Looking at the stock itself, the price has experienced dramatic volatility over time. At various points, shares traded at higher levels before pulling back significantly during broader market shifts. Eventually, the price stabilized at extremely low levels. Today, the shares are trading around $0.063 per share. So the question investors sometimes ask is simple. Is the current price reflecting risk and uncertainty, or the possibility that its services become more relevant as AI-driven data demand increases? The company provides solutions related to data protection, cloud storage infrastructure, and disaster recovery systems. These types of services help organizations ensure critical data remains secure and accessible even during system disruptions. But this is where things shift. Because when you actually look at the company behind this data infrastructure technology, you'll find it's Data Storage Corporation, trading under the ticker DTSTW, currently priced around $0.63 per share. Companies operating in specialized infrastructure niches sometimes take years before their services scale significantly, and smaller technology providers can face intense competition. So this doesn't mean the stock moves tomorrow. There are real risks here. And timing is often the biggest factor with small-cap infrastructure companies. Now, before we get into the second stock, here's something most people completely overlook. Even though AI demand is exploding worldwide, the systems powering advanced AI models require extremely fast memory and computing hardware. But unlike the first company, which focuses on data storage infrastructure, this second company operates much closer to the semiconductor hardware layer of AI computing. Instead of managing data, it focuses on building specialized memory technologies designed to process information faster and more efficiently. And this is where things get interesting, because AI models require enormous amounts of memory bandwidth to process large data sets. High-performance memory systems play a critical role in artificial intelligence. They allow processors to access and analyze massive data sets at extremely high speeds. These technologies are often used in areas like advanced computing systems, AI analytics platforms, data-intensive applications. Without efficient memory architecture, AI systems can experience performance bottlenecks. If AI computing demand continues expanding across industries, then companies developing specialized AI memory and semiconductor technologies could become increasingly relevant. Because faster data processing directly improves the performance of machine learning systems. Looking at the stock history, the shares have also experienced significant volatility. Like many small technology companies, the price moved higher during periods of investor optimism before eventually pulling back. Today, the stock trades around $5.44 per share, which raises a familiar question investors often consider. Is the market currently pricing in risk or overlooking the potential role this technology could play in future AI systems? And this is where it gets interesting, because the company behind this semiconductor memory technology is GSI Technology, Inc., trading under the ticker GSIT, currently priced around $5.44 per share. Semiconductor innovation cycles can take years before translating into large commercial demand. Competition within the industry is intense. So again, this doesn't guarantee anything. There are real risks involved with smaller semiconductor companies. So now the interesting comparison appears. The first company focuses on data storage and cloud infrastructure supporting AI systems. The second focuses on high-performance semiconductor memory technology. One trades around $0.63, the other around $5.44. But the real question investors think about is this: if artificial intelligence continues expanding across industries, which type of company benefits faster? A company providing data infrastructure services for organizations using AI? Or a semiconductor technology provider improving the hardware powering those systems? Both operate in completely different layers of the AI ecosystem, and both involve very different timelines for potential adoption. Technological revolutions rarely unfold in a single step. They expand across multiple layers of infrastructure. Artificial intelligence isn't just about software models. It also requires data storage systems, computing hardware, and advanced semiconductor technologies. And this is the layer of the market that tends to move later, but sometimes more aggressively if adoption accelerates. If you enjoy exploring smaller companies connected to emerging technology trends, Consider subscribing for more research-driven breakdowns like this. And as always, this discussion is for educational purposes only, not financial advice.